Welcome to Commerce GYAN. So we have reached part 14 of Basics of Accounting series, and in this we are going to learn simple tricks of preparing final accounts, and you will never make a mistake in preparation of final accounts if you watch this video carefully and learn all the detailed tricks in the methodology of solving the final accounts problems. Most of the students make mistakes in final accounts and they are not able to have the balance sheet matched. This is where they lose on the scores and their marks. So to avoid that, these simple tricks will help you to score better. And in fact, you can even get full marks in your final accounts question if you follow each and every step carefully and understand the smart tricks that I'm going to teach you here. There, you will be given the trial balance of a company with some adjustments. And what we are going to do is prepare the sole proprietorship final accounts based on the trial balance and the adjustment entries. So in this question, first, pay attention carefully to the steps that I'm going to tell you on how to start with the question, how to which part of that question you have to pick up first and where you have to enter it, what is the formatting that you have to do, and how to avoid the mistakes. So let's proceed to the illustrations on final accounts. Right, so first we are taking up this illustration 1, which has been given to you in the PDF file, which is kept in the description box of this particular video. So you can download the PDF from there and then you can start answering this particular question along with me. So you get a good practice of how to solve. So keep that PDF in front of you, keep a notebook in front of you, and then try and solve it along with me as we discuss this particular question and its solution. So the first thing you need to remember when you're preparing the final accounts is that you have been given the trial balance and you would be given adjustment entries. So at the end, there will be, if you see even in this question, you will find that you are given some adjustment entries. So here it's given adjustments, and these are the adjustment entries which you need to give effect to. First important thing to remember that whatever the trial balance accounts are there, like this is salaries, taxes, insurance, sales, bank overdraft, each and every account will have only one single effect. Now, what does this mean? This means that if you're talking about salary, you will have to identify salary when it is a debit. It's on the debit side, right, of the trial balance. So if salary is a debit, what is it? Is it expense or is it asset? See, debits can either be expense or it can be asset. So what you have to identify is salary. Is it an asset? Is it an expense? So if I say expense, then this expenditure is going to go into the trading or profit and loss account according to the type of the expense. Okay. But it's going to go to the trading profit and loss account. It's not going to go to the balance sheet. Fine. So only one effect has to be given to salary. Salary will either go into trading profit and loss account or it will go into the balance sheet. It will not go in both places, or it will not have a debit and a credit impact. It will have only one impact, unlike when we solve the journal entries. Journal entries, if you remember, the debit and the credit impact will be there. Both will be there. So trial balance, each and every account will have only one effect. That effect could be a debit effect or the effect could be a credit effect depending on the account. This is one thing. Second thing that you need to remember is that when you're talking of adjusting entries, these adjusting entries are just like a fresh transaction. It's a new transaction to you. So each adjusting entry will have two effects. One, a debit effect, and another will be a credit effect. Okay. Now, whenever you start with this particular question, what you're supposed to do is you have to mark these adjustment entries in the trial balance. Mark as in you have to just pinpoint so that you don't miss on these adjustment entries later. So what are the adjustment entries? First, we have closing stock. Closing stock is not anywhere in the trial balance, so leave it. Depreciate building, furniture and vehicles. Now what we have to do is we have to identify building, furniture and vehicles. So here you find that there is building. So I'm going to highlight this. I am having vehicles and I also have furniture. So I'm going to highlight these three so that I know that these accounts have adjustment entries. Fine. Next. Next adjustment entry is for insurance and commission. Okay, so insurance and commission, I'm going to track them and I'm going to mark them. Advertisement is here. Not advertisement. What was it? It was two things that we have is insurance and commission. Okay, so let's take insurance and commission. Do you find insurance? Yeah, here we have insurance, taxes and insurance. So I mark this and commission. There is nothing as commission paid, but it is commission received, right? So we have on the credit side, we have commission received. So I'm going to mark this. Fine. So I have these adjustment entries. What else is left now? I have a reserve for bad and doubtful debts to be created on debtors. And then I have outstanding wages and advertisement. So three things. One is debtors, second is wages, and third is advertisement. Let me mark them. All right. Now, what is our next step? Next step, is there anything here? Here you have 10% loan taken on 1/4/2017. So there is some interest on loan also, which will also have an adjustment because loan has to be is paying 5,300 of interest. If you see 10% loan, 53,000 is there. On this 10% comes to 5,300. But how much is paid? It is 2,800. So some amount of this interest on loan is still outstanding. So when it is outstanding, I have to give the impact of this outstanding expense as per the accounting the year concept, where I'm going to take all incomes and all expenses that are going to be relevant in this financial year. So this interest is relevant to financial year 17-18. So I'm going to take into consideration interest on loan and I'm going to add the outstanding interest on loan to this. So if you have missed out on the previous videos, just go through the adjustment entries videos that you have in this particular series of basics of accounting, where you will have a playlist defining all the videos. So go through those videos so you'll be more clear when you come here. Fine. Now, next step in preparation of final accounts, once you have marked all the adjustment entries here, what is the next step that you're supposed to do? The next step, we need to prepare the format of the trading profit and loss and the balance sheet. So here I have already prepared the format of trading and profit and loss account, where you have the debit and the credit is prepared in the books of Swaroop and Swanand. I've written trading and profit and loss account for the year ended 31st March 2018. The format is here. Then on the next page, so remember, if you're using a notebook or when you're writing in the exams, use one page for trading profit and loss account and the second page for balance sheet so that you have sufficient space. So this is my second page in the books of Swaroop and Swanand, balance sheet as at 31st March 2018. There is no debit and credit. There is liabilities, rupees, assets, rupees. Fine. So this is the format now I have. Now, next step. So first step was what? Trial balance. Check the adjustment, mark the adjustments in the trial balance. I've highlighted it. Now, after that, I prepare the format of the trading profit and loss and balance sheet. And after that, what is our next step is I am going to take only the trial balance accounts that are given. I'm going to put it in either the trading account, profit and loss account, or the balance sheet. So you are going to do it with me. First, take up the salaries. Okay. What is the salary? Salary, is it, since it is debit, what it is going to be is either it's going to be an asset, expense, or loss. What can you see when I say salary? Salary is going to be naturally an expense for the business. So I'm going to go to the part of trading account, right? Trading profit and loss account, I'm going to see now. See, trading profit and loss account is a single account. I'm going to leave some space for the trading account heads. And then from here, I can write the entries for the other parts. So salaries, I'm going to write here. Salary, how much is it? 11,000. amount. If there is an adjustment, then I'm going to write in the inner column. If there is no adjustment, I'm going to write in the outer column. So keep that in mind. So there is no adjustment entry since we have not marked any adjustment entry here. So salary will have only one effect. It is going to be placed in the outer column, 11,000 rupees. Next, taxes and insurance is indirect expense. So below salary, I will write two taxes and insurance. Two taxes and insurance. So you can see that I'm just taking the trial balance accounts and I'm going to place it either in trading account, profit and loss account or balance sheet. Now, if you see taxes and insurance, it has some adjustment, 6,100. I'm going to write in inner column. Fine. So I'm not going to give the effect of adjustments right now. I will do it later. Just now, just focus on the trial balance accounts. Third account in trial balance is stock as on 1st April 2017. So when I say 1st April 2017, it's going to be opening stock, right? 1st of April, meaning it is going to be opening stock. So go to the trading account. This is the trading account part. I'm going to stick to the format of trading account. First thing in trading account I have on debit side is to opening stock. Refer to the format. If you have forgotten it, please go to the previous videos and refer it. This is going to be 41,000 in the outer column. Next is purchases, 82,600. So below opening stock, I'm going to have two purchases. Is there any purchase returns? If you see the credit side, there is no purchase returns here. So I'm going to write 82,600 directly in the outer column. All right, next now. Wages. Wages 4,800. 4,800 wages will be written in the trading account. Wages is a direct expense, correct? So wages will be written 4,800 inner column because it has an adjustment. Next one, furniture. Now, what is furniture? Is it expense? No. Furniture is basically an asset. So it is a fixed assets. Fixed assets are written in balance sheet asset side. I'm going to go to the balance sheet asset side. Right on the asset side, first head I'm going to write here is fixed assets. So under fixed assets now, first thing I write here is furniture. And furniture amount is how much? 10,000. I write an inner column because it has an adjustment. Next is advertisement 7,900. I'm going to write 7,900 in the, what type of expense is it? Is it direct or indirect? It is indirect expense. Now, since there is an adjustment here, taxes and insurance, I'm leaving some space and then I'm writing on the next line to advertisement. Okay, what is the amount of advertisement that I have? 7,900. That will also be in inner column because there is an adjustment. All right. Next is interest on loan 2,800. Again, indirect expense, leave space for adjustment to interest on loan. So while you're solving, do it with me. Interest on loan, how much is the amount? 2,800, right in the inner column. Next one, debtors. What are debtors? Debtors are assets, current assets. Go to the balance sheet. Balance sheet, I'm going to make a separate part here, current assets. Leave few lines for any other fixed assets investment and then make it as current assets here. Then you have your sundry debtors. There is an adjustment in sundry debtors. So inner column 40,000. All right. Next one is building. Building is fixed assets 86,000. I go to the balance sheet, fixed assets, building. How much is the amount of building? Building is having adjustment, so 86,000 inner column. Next is vehicles, also inner column 62,000. Vehicles is also an asset. Vehicles is 62,000. Fine. This is also inner column. Next one, next in the trial balance, what is given? I'm taking all the debits first. Next is bad debts. Now, bad debts is a loss. Basically, loss is written in profit and loss account. So I go to the profit and loss account. So this is my trading account in the top part. Then I have the profit and loss account below. I'm leaving some space for interest adjustment. I'm writing your bad debts. Now, if you see bad debts is given in trial balance. So I'm writing bad debts only once in the profit and loss account. If bad debts would have been given in the adjustment, then I will have two different areas where I'm going to write the bad debts. But here, since it's given in the trial balance, dual effect, double effect, debit credit is already given. So I take only one impact of bad debts and I put it in the profit and loss state account, right? Next one now, cash in hand. What is cash in hand? Cash in hand is an asset, current asset, 12,100. I write in the balance sheet. So here I'm leaving some space for adjustment. Then I'm writing cash in hand. What is the value of cash in hand? 12,100. I'm going to write in the outer column because no adjustment is given. Fine. Next one now, investments. Investments is a separate head in the balance sheet. So I'm writing here investments. What is the value of investments that is given in trial balance? 20,000. So I'm writing in the outer column, no adjustment is given for investment. So I'm putting it here. Next thing given is nothing. So on debit side, all the debit accounts I've covered. Now I'm going to the credit accounts. All right. The credit accounts that are given here are starting with sales. So sales 1,40,000. What is sales? Sales is income basically. So incomes are written in the trading profit and loss account. And this is a type of direct income. It's not indirect. This is my main core business activity. So I'm going to write here buy sales. Right? So on debit side, whatever it is going to be to opening stock, to purchase. And when I'm writing on the credit side, it's going to be buy. So buy sales 1,40,000, outer column, no adjustment to this. Next one, bank overdraft. Bank overdraft is what? It is a liability, right? So bank overdraft liabilities side of balance sheet, I'm going to write, go to the balance sheet, short-term liability. So I'm going to put it under the head of current liabilities. So I'm writing here current liabilities, leaving some space for the capital account and everything. So current liabilities. And under current liabilities, sundry creditors. No, sorry. So under current liabilities, I'm writing the bank overdraft. All right, bank overdraft amount given is 18,000. So I'm writing 18,000 in the current liabilities. So hope you have reached here with me together solving the question. Next part is the commission received. Commission received is basically showing us that it is an income of 2000 rupees, 2000 rupees income. But income is not a direct income, it's an indirect income. Commission is not what the business is started for or the business is doing primarily. So it will become the indirect income. Leave some space here for gross profit brought down and all. And then leaving one or two lines, I'm going to write here by commission received. And this is 2000 rupees inner column because commission received is having an adjustment. Next one is capital. Capital account, we all know it is a liability. By now, you should be clear that capital is a liability and capital is shown in the balance sheet on the liability side 1,30,000. So go to the balance sheet. And the first part of your balance sheet liability side will be your capital. Capital will always have some adjustment for either drawings or the profit to be added in the capital account. So 1,30,000 always, the capital account will always come in inner column. Remember this. All right. Next one, creditors. Creditors 39,000 liability. So I'm going to write in current liabilities 39,000 of the creditors. Sundry creditors 39,000. No adjustment to this, so write an outer column. RBDD, reserve for bad and doubtful debts, 2,100. Now remember, whenever you get RBDD in the trial balance, the simplest way of writing RBDD, don't go for confusing tricks and confusing techniques. Whatever was the reserve for last year, just write it completely, fully in the profit and loss account credit side. Just remember this as a trick for the easiest way to write RBDT. So go to the profit and loss account credit side. The old reserve, I'm going to write back by reserve for bad and doubtful debts. Sorry, this is having adjustments. So I'm leaving some space for adjustment. Now I'm going to write the amount of RBDD. See, it is having a credit. So I'm giving a credit impact here. What is the amount of RBDD? 2,100. So I'm writing in the outer column. The new reserve that we are going to create is going to be created separately. So don't confuse that with this RBDD. This RBDD is an old reserve which we are now writing off. So RBDD is written off. Next, I'm going to take 10% loan. Loan is going to be a long-term liability since it is taken on 1st April and it is carried forward to the next year. I'm assuming it's a long-term loan. So 53,000 I'm going to write in the balance sheet because it's a liability. The loan is secured loans and long-term loans. I'm going to write here. So leaving some space for any adjustments to capital, I'm going to write here secured loans. And under secured loans, I'm going to write 10% loan. What is the amount of loan? 53,000 outer column. Next, bills payable. Payable is liability 4,000 and bills payable will always be short-term liability. So under current liability, I'm writing bills payable. What is the amount of bills payable? 4,000. So here I'm writing here 4,000. And that ends the entire trial balance, whatever the things were to be done, entered from the trial balance. So each one is given only one effect, either in trading account, either in profit and loss account or the balance sheet. So only one effect we have given. So this is the simplest way of writing of the trial balance. So majority of the transactions that were there in your final accounts have been entered now. Now what remains is adjustment and then closing the trading profit and loss account and balance sheet. It's simple. So first thing you always do is just enter the trial balance. So majority of your marks will be covered up here when you enter the trial balance items correctly in the trading profit and loss account and balance sheet. At least you know something, right? Next part is now let's proceed to adjustment or adjustment entries. Now closing stock. Closing stock is the simplest adjustment. Okay. Always remember closing stock comes on the credit side of your trading and profit and loss account. We have seen this when we did the adjustment entries video, right? But again, I'm explaining closing stock will be the amount remaining from your expenditures done on purchases. So I'm reversing, it's as good as reversing the purchases, and I'm writing your buy closing stock. Remember, stock that you're showing in your books of accounts is written at cost or market price, whichever is less. So this is the another thing that you remember when you write the stock items. Based on the cost concept of accounting, we say stock is valued at cost or market price, whichever is lower. So what is lower here? Cost price is 35,600 and market price is 38,000. So obviously the cost price 35,600 is what we are considering. So I'm going to write here closing stock 35,600. And this is one impact. Second effect, what was it? The second effect we given the balance sheet asset side. So the adjustment that we do here, you have already learned that in the adjusting entries, two effects we give. One effect, trading account for closing stock. Second impact that we give is in the current assets, closing stock, 35,600. Please note you have to write the same amount. So this effect is the asset effect, which is going to be a debit impact. And the one which we gave in the trading account is a credit impact. So debit impact, credit impact amount is same, correct? So first entry we have done successfully. Next, second effect is of depreciation on building, furniture and vehicles. What is the building amount? 5% is the depreciation on building. What is the building value? Let's see. Okay, building is 86,000. So what will be your depreciation? We are going to write here less depreciation, right? Depreciation is always reduced from the asset. It is the reduction in the value of asset due to wear and tear. So 5% of the asset value will be 4,300. In the inner column, I'm going to write the depreciation value, and outer column, I'm going to take out the value of the reduced amount. So building 86,000 minus 4,300 of depreciation. So 81,700 will be the value. Fine. Next, now this is just one effect, correct? I've given the reduction in the asset, so I've given a credit impact in this case because I'm reducing the value of asset. Asset has a debit balance. When I reduce it, it's going to be actually a credit impact. Now, what is the debit impact? I have to show this same value of depreciation in my profit and loss account as expense. So, amount of 4,300 I take to the profit and loss account. I'm going to write here to depreciation on building. And that is value is 4,300. Next one is furniture. Same way, I'm going to give the effect of furniture, 10% of depreciation on furniture, two effects. One effect, reduce from furniture, less depreciation, 10%. So 10% of what value? 10,000 becomes 1,000. What is the asset value after depreciation now that I carry in the outer column? 9,000. This 1,000 of effect of depreciation I'm going to give here in your profit and loss account to depreciation on furniture. What is the value? 1,000. Next one is insurance is prepaid at, vehicles also depreciated at 5%. Same thing I'm going to do with vehicles. First effect of depreciation less, I'm going to write here less depreciation 5%. 3,100. The 8,900 will be the amount of asset after depreciation. Now this 3,100 I'm going to take to the profit and loss account. To depreciation on for vehicle. Fine. Next one is of the third adjustment that we have, insurance is prepaid at 1,100. So what I do, whenever there is a prepaid amount of insurance, what I will have to do, it's not relatable to this accounting period, correct? So this amount of 1,100 I need to reduce from the amount of insurance. So less prepaid insurance. Value of prepaid insurance that I need to reduce is given as 1,100. So I write here 1,100 and take in the outer column the adjusting entry has been given effect to. So I take the amount in the outer column 5,000. Okay, and this 1,100 is basically a prepaid amount. So prepaid amounts are your assets, and second effect will be given to balance sheet asset side, current assets, prepaid insurance. So this, if you do in this manner, each adjustment entry, one effect, second effect, you will never make a mistake because you are not going to miss out on anything. So if you keep giving it immediately when you write the trial balance, it will be confusing. So take the trial balance first, then give the effect of adjustments. It's simple for you to remember and do it without any problems. So prepaid insurance entry is done. Both sides effect is given. Next one, commission received is 1,000 received for next year. So commission is received in advance. So one effect is reduce the commission amount that you have received in advance, and second effect is show it as a liability. Okay, so first effect I'm giving less pre-received income or pre-received commission 1,000. Outer column 1,000, and this 1,000 which is pre-received is going to be your liability. So I'm writing on the liabilities side, current liabilities, pre-received commission, and amount is 1,000. Fine. So adjustment entries done. Next one is RBDD to be provided at 5% on debtors. All right. Now, the old RBDD we have already considered. There is nothing to do with the old RBDD. Now, let's check how much is the debtors. Debtors are 4,000. So, on this, I'm going to provide for a reserve. So, that much of debtors are doubtful and that they are not going to be received. So, less RBDD. What is the reserve created at the rate of 5%? Okay. So here I'm going to take 2,000 rupees as reserve for bad and doubtful debts. Take 38,000 to the outer column. And what about this 2,000? 2,000 is taken away from the profit of that year because this could be bad debts. So it is as good as a provision for loss. So I'm writing here 2 RBDD 2,000. All right. So we have provided for the reserve of RBDD 2,000. Next is outstanding expenses, wages 200 and advertisement 1,100. So wages, let's give the first effect of this 200 of wages pending. So go to wages, add outstanding. Because add outstanding, why I'm doing addition here? Because that much of wages is not paid, but it is applicable for this financial year. So 200 rupees I was supposed to pay, but I did not pay. So it goes to 200 here. Then wages outstanding will be taken here as current liabilities, wages payable or wages outstanding. 200. What else is outstanding? They said there is one more expense that is outstanding is advertisement 1100. So again, I'm going to write, I'd add to the advertisement first, outstanding expense in the profit and loss account, add outstanding 1100. So 9,000 is the total value of advertisement now. And 1,100 outstanding I will show in the balance sheet, current liabilities, advertisement outstanding. $1,100 done. So all the adjustments are done. Only one of interest is remaining now. What was the amount of loan that is taken? It is 53,000. On this, you're providing 10% of interest, which you're supposed to pay. So 5,300 was the interest that is supposed to be paid. But how much have you paid? You have paid only 2,800. So the remainder amount will be your outstanding value. So remainder amount of interest I'm going to add of 2,500 in the profit and loss account first of all. So interest on loan add outstanding. Value is 2,500 and take it to the outer column 5,300. So this 2,500 now I'm going to write it as outstanding interest 2,500 in balance sheet. $2,500. So we have done with the adjustments. Take a look at all the, or you can say question, the entire question, and whether we have given the effect of all the adjustments. If yes, now we are going to go to the trading account. Now this is the first part of your account, trading account. Let's take the total of credit side, total of debit side, find out which one is more. And if your credit side is more, then it will be profit, gross profit. If your debit side is more, it will be gross loss. 75,600 is your credit side. Debit side also should be equal to 1,75,600, but there are some entries here. So if we reduce these three, 41,000, 82,600 and 5,000 from 1,75,600, what we will arrive at is the gross profit. So to gross profit carried down. Find out how much it is quickly. 47. So gross profit that we have calculated is 47,000 here. So this 47,000, I'm going to take it to the profit and loss account as brought down gross profit. So by opposite side, right? So by gross profit brought down. Amount is 47,000. So let's check the credit side of profit and loss account. How much is the total of credit side? 50,100. So this is more than your total of the expense. Check the total of the expense. You will find that this amount is less. So expenditure is less than your income. The expenditure is 42,500 and your income is 50,100. So differential amount of 7,600, that is your income, is more than your expense by the difference amount of 7,600. So I'm going to make both sides equal by writing on the debit side to net profit transferred to capital account. 7,600 and take the total of the debit side. It should match to 50,100. Fine. So we have closed our trading profit and loss account and the trading account and the profit and loss account and got a profit of 7,600. Now, where do I put this profit? It's going to get added to your capital account, 7,600. So here I am going to write in the capital account, add profit for year 7,600. So this I take in the outer column 1,37,600. All right. Now take the total of the balance sheet and your both sides will be equal. They have to be equal. Here there is nothing like we have to balance it. It will match. Both sides total you take of the balance sheets and the total of both sides will be 2,56,400. It will match on both sides. You are going to close the balance sheet. Write on the same line the total. That ends your problem. Here you don't have to make any adjustments. You don't have to make any kind of carried down, brought down in the balance sheet. So automatically the balance sheet will match. If your balance sheet is having a mismatch, that means it's either the liabilities are more or the assets are more, then you have made some mistake. So this is how you would be solving the final accounts question. So hopefully this is clear. These are simple things that you need to follow. So just to repeat, first thing what you have to do, check the trial balance, mark the adjustments in the trial balance, then prepare the format of trading profit and loss account and balance sheet. Next step is you pick up all the entries from the trial balance and put it either in trading account, profit and loss account or balance sheet, only in one place. Second, next, after that, what will we do? What I want to do is basically pick up the adjustment entries and make the two effects, give the two effects to each adjustment entry. So one impact will be a debit impact and second impact will be a credit impact. And finally, what you're going to do is once all the adjustment entries are done with, you're going to close trading account, then carry down the gross profit or gross loss in the profit and loss account. From there, you're going to close the profit and loss account, carry down the net profit or the net loss to the balance sheet, add up the amount in the capital account and match the balance sheet. So that the balance sheet automatically, the total of assets and total of liabilities will be the same. So if you solve your question, each and every question in the same pattern, you will never make a mistake. So hope this trick is clear to you of how you prepare the final accounts and use this for each and every question that you have. You will solve it easily. All right. So let's hope to see you in the next video of Commerce GYAN.